We're joined by Ed Dowd of Finance Technologies and Dan Collins. He's the host of Chaos Incorporated podcast. Thank you both, gentlemen, for being here. I thought we could have a lively discussion about this. Some people find economics dry, but it affects every one of us. And I keep hearing complaints. Ed, I'll start with you. I keep hearing complaints that the average from just regular Americans that they don't feel like prices are coming down, and they're starting to question the president's policy a little bit. Where are we?
Well, the president's policy is going to take time to manifest into the economy. This China trade deal hasn't even been struck yet. We've had 2 trade deals with Japan and Europe, and we are not currently having any benefits from those because those need to be ratified in their respective parliaments. Trade negotiations like this, and then the deals getting struck, they take time to manifest into the economy. And that's why typical Americans aren't feeling anything yet. Also, we unfortunately have, due to our, we believe through our research, a housing recession coming. And that's going to cause a deep recession in the U.S. sometime in the next 12 months. So, President Trump got handed a turd from the Biden administration, and there's going to be a valley before recovery. China, I think, is in a bad place to negotiate. We're putting out a China report, a deep analysis of their economy, and they're accelerating to the downside as we speak. That's kind of the big takeaway. So Trump has a lot of negotiating power when it comes to China, we believe.
That's the exact opposite of what Brandon Weichert told us on the show. Dan, do you agree? You're very familiar with the Chinese economy. Do you think that Trump has the leverage here?
Well, as you probably know, I lived in China 20 years, so I'm quite familiar with it. The China's economy is in a down cycle, right? They're in a big housing overhang right now. The housing prices went from I myself own some houses in China, and the valuation increase was incredible, like you couldn't believe it. But that's going down. They're trying to deflate that housing bubble. The real economy in China is struggling, which is actually a negative for us because they're not going to be able to bail us out like they did in 2008 with that economic growth where they were adding a new Saudi Arabia to the global economy every year. Trump's trade tariff policies, which I agree with, I don't agree with the way they implemented it. I would have went through product by product line instead of just blanket tariff. But he's increased the tariff rates from last year. Section 301 was around average 25% to now 50%. That is all designed to bring manufacturing back. So when you do manufacturing business cases to set up plant, asset, and equipment, that tariff is designed to just put it in the U.S. And I think you're seeing some green shoots develop. So you're starting to see a lot of big pharma plants in construction, a lot of steel. However, that takes a long time. The real economy now, I believe we've been in a recession since 2022. You look at freight volumes, the real economy, they're calling this the Great Freight Recession. Of trucking volumes are down 25%. You can't make money in trucking. Like 31,000 trucking companies have closed down in the last 18 months. So they're only getting paid for the driver and the gas. They don't get paid to depreciate the truck. So when you look at real economy, it's struggling, and we're in a good transition time where we've got to reindustrialize quickly, before the financial macro situation takes us down completely.
You know what? It's interesting you said that about trucking. I had a friend in California who sold his trucking business like a couple of years ago, just right before all this hit. And we told him, man, you really had divine timing there because he would not have fared so well selling right now. Ed, the major growth over the last 12 months, according to the Financial Times, has really relied on artificial intelligence, the AI sector. Is that good? And I mean, what does that bode for us for the future? You're not as hopeful. Yeah, I can't wait to hear what you have to say about this.
Yeah, if you back out the AI capex that went on in Q1 and Q2, we had slightly negative GDP over those 2 quarters. This is a classic infrastructure build out and boom speculative bubble. We've seen this before with the railroads in the 1800s and the .com dark fiber build out. We're seeing it again. And I will say something. Mark Zuckerberg recently had some comments actually saying that we may be in a bubble and that eventually we'll see some productivity from AI, but he said maybe this time's different, but who knows? So what we have is huge infrastructure build out, and no revenues or ROI on the other side. There's no business case yet. And this is classic, just like there was with the telecom equipment and dark fiber build out. There was no business case. Then we had the bust. Then we had Web 2.0, and then the real companies emerged like Facebook and Apple and Google. The only one that really survived the dot-com era was Amazon.com. Everything else was wiped out. And that's where we are. And once the capital markets figure this out, the bubble will burst, and then the stock market, which is being held up basically by 7 to 8 AI stocks, will go down. And that's when the mainstream media will start, talking about the real economy, which has been, to Dan's point, not good for a long time.
Sounds like you both are pretty much in the same place about where you see this.
Yeah, AI is particularly concerning to me.
I can't disagree with Dan.
Yeah, I was going to say, AI is very concerning to me. In addition to Ed's comments, not a lot of people. I had my own GPU data center in mining crypto a couple years back with about 200 NVIDIA GPU units. We spent $50 billion on GPUs this year. People don't realize that's not a normal capital investment. And 1 to 3 years, those are dead. They're gone. They break, right? And then you have to replace them with either newer GPU. So this is just like every year, $50 billion in capital investment is just going to get wiped out, go to zero. So to Ed's point, where is that incremental revenue coming from to pay for all this? That's assuming, if you look at NVIDIA, it's 7% of our stock market at one point. So if it's all chips on the table for the U.S. economy and behind AI. And in addition to the GPU issue, you have the electricity. We may not have the electricity to fund the AI growth.
Yeah.
So that just may bottleneck it right there.
Here. Yeah. Gentlemen, we have literally run out of time. 30 seconds. Go ahead, Ed. Let's get it in. I want to hear it.
To piggyback on what Dan said, there's been loans, private equity and bank loans to these AI companies with NVIDIA chips as collateral. And Dan just said they go to zero basically in 3 years.
To be continued. There's so much more we could say about this. I wish we had more time. You both are great. Thank you so much, gentlemen, for joining me today. It's good to see you both.
Thank you.